After we understood what challenges insurer will have in the future and what they need to do to keep up with the pace of digital attackers like insurtechs, we will have now a deeper look on that what we as customer, can, will and should expect. Welcome to a brand new episode of the Finance Real Talk, where it's all about the future of finance and what we should do, expect and take care of. Technology is a lifeline to increasingly digital insurance consumer segments. COVID-19 accelerated the transition to digital in 2020 across all demographic groups. However, clear differences in generational appetites for digital offers emerged. Millennial and younger consumers, age 18 to 34, express greater interest in digital offerings that help them make safer, healthier, and more sustainable choices. Insurers will need to work with ecosystem partners to create and participate in digital platform offerings that help them succeed with this segment. From fitness devices that track and encourage healthier habits, to companies that offer coaching in nutrition or stress reduction, insurers have a wealth of partners to choose from to help their customers. And with a market value of $1.3 trillion in global health and wellness by 2024, ecosystem investments are well worth it. This same demographic, age 18 to 34, values sustainability. Insurers are already well positioned on this, with 71% of millennial and younger consumers saying they see their insurers delivering on ethical and sustainable business practices. More than two-thirds, 67%, say they want digital experiences that encourage sustainable travel and shopping practices. The Generation X and the baby boomers are slowly becoming more comfortable with digital insurer interactions. They show increasing preference for digital claims, with 71% saying they would like the internet chat video insurance claim process to replace the traditional in-office claim process, an increase of 3%. Consumers say they are more willing to offer personal data in exchange for more personalized pricing, offers, and discounts. They are increasingly demanding to be charged based on behavior and habits, and they're willing to allow insurers to collect and use their data in exchange for that value. Consumers are being pragmatic and protective with their data, however. They say they will only share data for incentives. They show no increased willingness to share data without those incentives. Approximately 7 out of 10 consumers, 69%, would share significant data on their health, exercise and driving habits in exchange for lower prices from their insurers, an increase of 19% from 2 years ago. More consumers, 66%, would also share significant data for personalized services to prevent injury and loss, up 54% from 2 years ago. Here are the 5 things customers want from their insurers. The recent ruling on add-on sales from the regulator shows that clarity is important to insurance customers. People want to know where their money is going and what additional value you are creating for them in exchange for an increased premium. In consumer IT, that's what Apple's business model is based on. A new Mac costs more, substantially more, than a new PC of similar specs. 1 in 20 people choose the Mac anyway. They like the simplicity of use, the durability and the ongoing service relationship, and they're willing to pay for it. There are no hidden extras. The specifications and pricing are clear to the customer at the point of purchase with Apple product. My local pizza delivery store promises that if my order doesn't reach my front door within 30 minutes of our phone call, I eat for free. I never end up on hold or in a queue when I want to order pizza. I call the shop, they answer the phone. Pizza isn't an expensive product. Yet, the vendor understands that as a customer I want to eat when I'm hungry and I want to talk to a human being when I call, so they offer a service guarantee to demonstrate their commitment to my needs. The insurance industry could learn a lot from my pizza delivery service. People don't like automated queuing systems. In the event of a claim, in particular, they want to talk to someone right now. Someone who has just been burgled or been in an accident, etc. is far more stressed than I am when I want pizza. Empathy is a vital component of customer care in any industry. It's doubly important in insurance. Customer service staff cannot come across as disinterested or even only doing their jobs. In the case where a claim is being denied, this is even more important. A lack of empathy can be found across the financial sector, probably because it's easier to focus on the numbers rather than on the people. Your customers want to be treated well throughout their customer lifecycle with you, not just when they sign on the dotted line for a new policy. Google, "Should I renew with my insurer?" and you'll see that the first page of results is all about shopping around to get a better deal and how automatic renewal appears to be loaded in favor of the insurer. This makes very little sense. It costs more to attract a new customer than to retain an existing one. Yet, in many cases renewal is poor value for a customer. Insurers should be focused on building loyalty with their clients. Loyalty is a two-way street. If you give your customers your loyalty, they'll give you theirs. Payment protection insurance wasn't bad value, it had no value to the customer at all. This simply isn't good enough. Insurers should be looking to build a great reputation with their customers, and products like PPI will always be damaging in the long run. You should be able to illustrate the value in any product from the customer's perspective. If you can't, it's probably a bad product. In an age full of speed and an overkill of offerings, insurers must understand that the business has to be built customer-centric. That's a mistake what traditional banks, for instance, learned the hard way and lost many clients to fintechs. Now is the same with insurtechs and insurers. To avoid spamming customers with unnecessary products, insurers need to learn to use the right set of data to tailor the right product. They also have to be 24/7 365 available for their customers. Remember the pizza example. The usage of their products and how to handle the claims, for instance, must be pretty much convenient, and last but not least, getting the right needed products which are also easy to understand without reading loads of paperwork is key to conquer the loyalty of the customers. Folks, fellows, and partners in crime. Hope that you will find the content useful, and it would be great if you could let me know in the comments section below what you think about how the future of insurers and insurances will look like. If you're new to the channel, then don't forget to hit the subscribe button, and for everyone else, smash the like button.